Forget banks, forget draining your savings. Now, picture this. You find the perfect property, great location, strong cash flow potential, but the bank says no, or buries you in endless paperwork. Meanwhile, seasoned investors are locking down deals effortlessly. Ever wonder how they're doing it? Because they're using business credit to move faster, smarter, and without red tape. Today, we'll walk through exactly how you can do the same, step by step. If you're serious about growing your rental portfolio, make sure to hit that subscribe button. The move in step 3? Most beginners don't even know it's legal. Let's skip the waiting game and get straight to what you really want, using your business credit to access actual cash. In 2025, one of the smartest ways investors do this is by leveraging payment platforms and creative tools that legally convert credit into cash. Think of platforms like Melio and Plastiq, which allow you to pay vendors, contractors, or even yourself using a business credit card. For things that normally require bank transfers, these services charge a small fee of around 2.85%. but open the door to liquidating your credit cards into usable funds fast. They even let you cut checks and just charge the balance to your credit card. Another clever tactic? Partnering with manufactured spend experts. These are trusted providers who help you cycle credit card spending through safe transactions that get refunded as cash. Basically setting up high-volume payment loops that build points and convert into liquid cash flow at the same time. The beauty of these tools is they're 100% legal when used properly. And in many cases, you can loop cash back into your business checking account to fund property deals. This bypasses the usual roadblocks of traditional financing and turns your business credit into a powerful weapon for snapping up rental properties fast. Once you've got that cash flowing, it's time to unlock serious buying power with high-limit cards and credit lines. Once your business credit is solid, it's time to unlock some real buying power. You'll want to go after high-limit business credit cards, not the ones meant for buying coffee, but the ones built for big moves. Cards like the Chase Inc. Business Premier, American Express Business Platinum, and Capital One Spark Cash Plus are great choices. These often come with limits ranging anywhere from $20,000 to even $100,000 or more, depending on how healthy your business finances look. Some of these cards also let you write convenience checks from your credit card. Watch out though, as these cash advances often include a fee of 3 to 5%, and a lot of times you won't be getting your 0% intro APR on them. It doesn't stop there. Next, apply for business lines of credit, or LOCs, especially from fintech lenders or small local banks. In 2025, many of these lenders focus mainly on your business cash flow, not on your tax returns, personal credit score, or piles of paperwork. Think of it this way. Instead of rushing around for a mortgage when you spot the perfect property, you've already got cash lined up and ready. When a deal comes up, you can move fast. No long bank meetings, no waiting, no hassle. High-limit business credit cards plus flexible lines of credit mean you have real buying power, while others are still stuck waiting for approval. Next is step 3, where everything starts to change. And hey, don't forget to subscribe. Step 3, converting business credit into cash. Most sellers and real estate agents don't want to deal with complicated financing. They want cash. So how do you turn your shiny new business credit cards and lines of credit into actual money you can use to close a deal? It's easier than you think. Some business credit cards, like the Chase Inc., offer balance transfer checks you can write directly to yourself. With the balance transfer, you can also take advantage of 0% APR intro offers to pull cash out without paying high interest rates right away. And if you have a business line of credit, even better. You can simply draw the money straight into your business checking account whenever you need it. In 2025, platforms like Fundbox and Bluevine will make this process even smoother. You can pull cash from your credit line and wire it to an escrow account for a property purchase almost instantly. These do come with high interest rates though, so only use them if you need to and can pay back the money quickly. Bottom line, You can cover your initial cost or even pay the full price for cheaper properties without touching your savings or waiting around for a slow bank loan. Just smart moves, strong business credit, and closing deals on your terms. Once you've bought the property using business credit, the next step is to make the financing long-term and manageable. After all, you don't want short-term credit hanging over your head forever. That's where DSCR loans come in. It stands for Debt Service Coverage Ratio. These loans are built for real estate investors and are way more flexible than traditional mortgages. Instead of digging through your personal income or W-2s, lenders only care about one thing. Does the property make enough rental income to cover the mortgage? If the answer is yes, you're good to go. But it's not always smooth sailing. If the answer is no, you might need a bigger down payment, find a higher rent property, or expect tougher loan terms. Typically, lenders want to see a debt service coverage ratio of at least 1.2 times, meaning your rent should be 20% higher than your mortgage payment. For example, if your mortgage is $1,000 a month, they want to see at least $1,200 in rental income. You can also go for a business mortgage if you prefer, especially if you want the property under your LLC's name, keeping everything separate from your personal credit. This strategy lets you BRRRR, buy, rehab, rent, refinance, repeat, all fueled by business credit, turning short-term plays into long-term assets without ever tying up your personal finances. Now you've cracked the code, but here's the real talk. Scaling too fast without managing your cash flow is the quickest way to crash and burn. Only reinvest when your rental income easily covers your business credit payments, not just barely scrapes by. Also, a big con to watch out for: business credit usually comes with higher interest rates if you're not careful, and cash advances can get expensive fast. Plus, over-leveraging without enough reserves can leave you exposed if rents drop or repairs pop up. The smart move? Grow steadily. In 2025, setting up multiple LLCs and building separate credit profiles is easier than ever, giving you more leverage without stacking risk. Slow, steady, and smart always beats desperate and reckless. And that wraps up everything you need to know about buying rental properties using business credit in 2025. Are you thinking about buying your first rental property this year? Or are you already using business credit to scale your investments? So tell us in the comments which team you are in. And if this video gave you even one good idea or opened your eyes to a new strategy, make sure to hit the like button and subscribe. We have a lot more financial tips coming your way. Your rental journey starts now. Let's build something great.